Hello and welcome to the Wednesday check-in here on Landy's Crypto Corner. Today is December 18th, 2024, and we are, of course, looking at Bitcoin as always to give us our market direction in general for the crypto markets. Now, it was a pretty bloody day in the lower term timeframes, but on the daily, this was a revert back to the mean, the basis band here on the daily for Bitcoin. Now, I know that there is a lot of things that happened today. We had rate cuts and like all of this other news that was coming out, but we've talked about what to expect and what to look for in terms of criteria to the upside and downside, and in particular, continued expansion for Bitcoin here on the daily. And I had noted that for Bitcoin, one of the key areas to the upside above one of our levels at $106,000 was kind of to look at around $106,000 to $108,000. And let's see where we topped out. 108,388. Now, I also noted that wherever Bitcoin puts in its next high, it was very highly likely going to throw another drive of regular in-trend bearish divergence. And it has done that. We're going to kind of start out a little kind of overview wise when looking at Bitcoin, and then we'll move into kind of the trend, support and resistance, volatility, and momentum aspects. We are going to jump around a little bit to start here. One of the key things that I want to see for Bitcoin here for the bulls, if you're bullish, we want to see continued closures above the basis band here and above this last higher low swing. And this is coming in at 99,220. If we do see a breakdown on a closing basis below here, then I would, be looking for further, if it hasn't already dropped further, likely to the lower first standard deviation initially in the lower term timeframes as it relates to the daily. In this case, that's coming in at 96,862. And anywhere below there, I'm going to start looking for, kind of this zone right around this low, around $94,220 to $95,000 essentially. And you can see that this higher low swing relative to the big spike down, this was where we saw the $104,000 wick high to the $92,000 wick low. We had this higher low swing come in at 94,220. That's essentially where this prior swing came in, which was around 93.5 or so. So right around that area is fair game should Bitcoin drop that lower first standard deviation and start heading down to the lower second at 93,824. So right between these two swings here, we can see that we have the lower second standard deviation. If we did see any kind of a breakdown on a close below there, well, then we're starting to look over to the next kind of swing low area at 90,000 and 90,682. And then we have, we do have some confluence for structure here in terms of this high side structure where the close open high is coming in here and the swing high over here at 93.5 as well, which is where this swing is, or right around where this swing is, and the lower second. So essentially, if this swing high is regained by the bears, the closing high to this last swing high or low here are fair game, and that's coming in at 91 down to this 88,700 area. Anywhere below there, oh, I'm dropping stuff again. I always knock things over that I sit down at this desk and then I put something on it and I inevitably knock it over. But either way, anywhere below here, what we really need to pay attention to is this consolidation structure, and specifically this first bearish candle after the expansive move up. And the low side of that is coming in at $85,000. Anywhere below there, we're looking essentially 80 to 82.5, and then probably your upper 70s, and possibly a retest of this structure here, which would be a retest of the breakout in that case, and a very, very large correction from that high at $108,000. So that's all fair game if Bitcoin were to initiate expansion to the downside below the lower second at 93,825, and specifically dropping around 93.5. That's when we really have to start entertaining an expansive move down. Right now, this is bullish structure. This is even bullish in the context of the Bollinger Bands. We didn't really kick off full-on expansion to the upside because we didn't get our continued closures above at minimum. The minimum criteria was to close above the upper first standard deviation, now coming in at $103,000. So, this is, not unexpected either. Bitcoin was kind of topped out across timeframes for anything that you could possibly measure with different tools that are available to us. And in this case, we see this drive of bearish divergence playing out. We do have other drives of bearish divergence in here, so there's multiple drives. Could this drop further? Yeah, but as long as it's in higher low structure and maintaining, even if it drops this swing higher low right here, which did turn into a closing higher low, but it's not really a complete higher low. I really look at this last higher low as being the one to watch. And maybe we just go ahead and point this one out for structural purposes for trend. And that's going to be the zone between 96,660 and 94,220. And anything in this zone is fair game. Closing below it and dropping the lower second while there is some lows over here does imply that if we haven't already tested lower, we will see tests lower, right? So that's kind of where the bulls want to hold up if price does get there. Even better if the bulls can hold up around the basis band here at 99,900 to around $100,000. And in this case, we can just kind of go ahead and draw a box around this. Helps if I pick the right tool menu and, just to kind of define this area of interest. And now that we've had a bearish reclaim of the high side structures on both swings and closes, and even heading down to test this high side structure, we have a zone. And the zone is essentially from the high over here to the highs up here. And we can even draw a closing zone of interest on the daily here. And that can be something that, it is personal preference, but something to pay attention to on the closing highs here before moving up. The last real closing high that was put in was this guy right here. And then we see that we start moving up above it. And we can have that as a zone of interest and just mark the actual high up there as, this is the highs, the swing high at 104 to a swing high at 108. And then we have some criteria of like, okay, these areas on the daily are of high interest when we're looking at our lower term timeframes. So for those of you that have been, paying attention to the Tuesday live streams with The Organized over there and Peace Love Music, who hosts that show, and is kind enough to bring me on. We went through the 4 pillars to technical analysis, which are trend, support and resistance, volatility, and momentum. And then we've been just kind of reviewing that, breaking down price action, and kind of doing exercises based on those 4 key principles. And, this is a good way to start out. And it is subjective. So you are going to have to figure out what those zones of interest are for yourself. I would say that outside of this zone on the bottom, we have, essentially this low, which comes right around in line with the spike low from the 5th of December. That is an area of interest down to the top side of the candle structures here where this low comes in, right? So if we were to look at the closing areas of interest, we can say that this was a front run of this area. And when looking left here, we have essentially the high side structure. You can even take the bearish candle structures here, but we can just go high side structure. And realistically below there, if it starts to lose the actual low, we'll just grab the actual low as the criteria there. Then, we have to pay attention to this structure over here. We're either already testing the candle structure over here in this consolidation to this low, or it's going to be tagged, right? So we can always just mark this up. We have the first bear candle from the expansion is where the big higher low structure here, or bigger higher low structure after the interior candles here. We're holding price up. We saw the low come in right at that top side of that open of this bear candle, this close open from bull to bear candle. And essentially all the way down is fair game, all the way down to $85,000 if this is dropped. There is closes down here. There is, to pay attention to down to that wick low. You can make it as complex as you want. we can go the more complex route, and we can just kind of identify this zone of interest as like, okay, this is kind of the line in the sand zone. And you define the criteria based on all of this stuff, and then you can color code the zones and kind of say like, hey, this is, these are the important areas that I want to look in. And that will help you in those lower term timeframes say like, look, there's a lot of support areas down here. And in fact, we have an area where we saw a high to a swing low and higher low structure confirm this zone as support. We saw a big move up, and then a swing and higher low closing structure confirm that this high side structure as support again. And then as we move through, after that test, we come down and we get some support locally, move up, spike down, front run this support over here. And as we put in higher highs, we confirm this area as support, so on and so forth. This area as support. On a retest, you look at it as support, and then you just move down the different zones, right? And in terms of our trend, right, we're still in a nice uptrend, and that trend will break on a swing basis below this low here. The last big higher low close is this area here right up against that lower second. So we have a volatility level volatility levels of interest rather. We have the basis band right in the middle of an area that we want to see flip to support on this retest. And if it is lost, then we have the lower first to lower second kind of bracketing a big higher low closing structure. And if that's lost, then we start working our way, from where we have confluence at the highs and the lows here as an area of support and resistance that we want to see retested as support. If that fails, then so on and so forth, right? And then the last line in the sand is this area between $87,340 and $85,000. You can make that red, and then the top side green, test back above $104,000. We're looking for the high side structure to get ran. And right around the swing highs here, where we were seeing some pretty good resistance around $100 to $102,000. We have the upper first, and it closes back above there at $103,000. Then we're looking to 104 at this swing high. And then above there, we need to see additional criteria to the upside being met, above the upper second standard deviation within this zone of resistance. We need to see closures above about $106,000 to go test that 108,000, almost 400 up top and get expansion. So if we see closures above $106,000, we will get re-expansion back to the upside, but we need to see closes above now 108,388 to get true expansion of volatility to the upside. If we only see swings above, then, that while we could see deeper price targets in lower term timeframes, that still wouldn't meet the criteria for daily expansion back to the upside. And that's, kind of how I break these things down. So we've got trend, support, and resistance, volatility. Last piece would be momentum. And there's two different momentum indicators here. There's the RSI, and this is running for this one, this is running a Wilder's version of RSI, not Cutler's. I'm not going to get too deep into that. I might actually start covering that stuff in those Tuesday videos where I'm teaching you about technical analysis. But in this case, I do want to point out some areas of interest to be aware of and where they might have confluence with those zones and bands that we were just looking at. So we have the bullish control zone, also where this 12-period moving average is coming in, kind of used as a soft signal line in obviously conjunction with everything else that we're looking at. It's just a confluence indicator. But in this case, it's coming in right around that bullish control zone. So it's at 106,500 or 450. 106,450 is where the SMA is. And then we have the bullish control zone at 105,150 or so. So we've got about a $1,300 range between the bullish control zone bottom side here rather, and the SMA. If we were to see Bitcoin, of course, climb back up to $105,000, again, what do we need to see? We need to see closures above the upper first here at 103. That would look good to test up to the upper second, which is right around $106,000. That would put Bitcoin back in the bullish control zone, but not yet above the actual signal line there, you could call it, or moving average in this case, at 106,450. If we started to see closures above the upper second standard deviation, Bitcoin would be back in the bullish control zone and above this simple moving average here. And to the downside, we have the scale midline is coming in at 97,800. And in this case, where is 97,800? Well, that would be below our basis band, and that would even be below this $99,000 area that we would want to see as support, which is this high side structure over here that we did see Bitcoin kind of flip into support on some of the daily candles, big move down for that higher low, and then it saw support in here off of this high again. But that would start to put us down in this kind of no man's land where we do have a high side structure in here around 97,500, but realistically the lower first is where we would have confluence. So we would likely see, even if it was just intraday, spikes down below this, because the RSI is measuring closes. We could even see spikes or RSI get below that scale midline if we were to see it start to drop some of these areas, specifically $99,000. Where is the bearish control zone, or the edge of the bearish control zone? In this case, the top side of it is coming in right now at 88,981. So basically $89,000. Where would that put Bitcoin in terms of price on the daily? Well, that would actually put it below the lower second standard deviation, and all the way down here, even below the lower third standard deviation, starting to dig into this higher low structure. One step away from the critical zone that Bitcoin would need to hold, and that would be a very large correction, but it is lining up in general with an area of interest to the downside here between 88,700 and just around $90,000. So something to pay attention to. This will update day over day. We'll take another look at this chart on Friday and see where it's at in terms of the numbers that update here. Now, could Bitcoin throw bullish divergence again? Yes, if it puts in a low here, or even lower, as long as it's above the last higher low and even some of these higher lows back here, it's more likely that it's going to throw all the way back to this low at 88,700. It will throw hidden bullish divergence. So that's the blue here, not in trend bullish divergence, but hidden bullish divergence, as we are getting higher lows versus, if it's a higher low versus this guy over here, but a lower low on RSI, then it is hidden bullish divergence. Some people call them phantom drives. Some people call them other things. But in this case, that's a continuation drive. Does that mean that, it's destined to break out and go back to the upside? No, not necessarily, but it is good for at least price momentum back to the upside. We're already probably seeing, if it happened right here, right now, we're probably seeing Bitcoin try to retest, above $100,000 into the mid 105 region or something like that around the upper second. Doesn't mean that it would get above it, but it would be good for a little confirmation of that pop up. And I would take it one step at a time with the overhead resistances. Now let's go ahead and take a look at stochastic. This is a regular Stoch momentum indicator, which measures close over close price momentum. And this is not the velocity of RSI, which would be your Stoch RSI. We see this little trend line regression. It has now lost it coming into this close initially here. There's another little trend line regression that it front ran a couple of days ago off that last higher low. On a closing basis, because again, this is measuring close over close price momentum, not the velocity of RSI. This is a regular Stoch. Now, the momentum pivot's going to be 105,300. Back above the upper first standard deviation at $103,000 would look good, but again, needs to be pushing back above that upper second standard deviation. Do I think that it would necessarily be all in one go? If we just get twin towers here and this just rises back to the top side, it would have to beat out the open from Monday's candle here at 106,145 on a close in order to start looking like a nice higher low close. Otherwise, it would just be a swing low and some devious close open action here on the daily. So yeah, I mean, there's a lot to think about, but it's actually pretty dead simple. Let's actually go down and take a look at the 12-hour, because the 12-hour has been throwing bearish divergence everywhere. It's going to have a different swing structure as it relates to the daily. And we could reference that while we're down on this 12 hour, but I actually just want to see a clean chart real quick here. And that is going to be, losing the basis. If it's broken down from the last closing higher low and swing higher low. This is actually a pretty nice structure here. There is one more right here at around 99,400, right? And that lower first. So if it does drop, that lower first is fair game. That's coming in at 98,700 to around $99,000. If it doesn't hit it and it updates, it's probably going to tick up once more. We did get a decent expansion on this structure here, not like what we had previously seen, but this is still sideways and up. Even if it does break down from here, we do need to see structure develop. And realistically, we want to see, even if it closed below the lower second at 95,785, it still has to drop this low to go and test the other low side structures here. So far, not too concerning unless we start seeing it nuke down through some of those levels for the bulls. So we'll probably see some bulls in here bidding, try to pick this back up. In this case, bullish divergence still well on the table all the way from this low and even this low back here, this guy right here to this guy right here, this guy right here. So, hidden bullish divergence still on the table wherever it happens to put in a low side structure. And because we'll see two 12-hour candles in this daily candle, we'll get a little bit of a preview. Say the 12-hour candle closes something like this. And then the next 12-hour candle closes above $101,000, basically $100,930 here on Coinbase. Then essentially it would set this swing low, and you'll get a technical closing low set. I would still need to see it get back above the upper first and above the open of this 12-hour candle at $105,000 essentially. So it would have some work to do for confirmation, but it would set a low and likely try to rise through this basis band. Need to see it above this basis band again for the 12-hour chart here. That's coming in at 101,600. We've got bearish divergences everywhere. We want to see hidden bullish divergence, and likely soon we want to start seeing this kind of go into a consolidation structure and start throwing bullish divergence. But what does bullish divergence, regular bullish divergence mean? That means that we're getting lower lows on price with higher lows on RSI. So right now it's in hidden bullish territory. And eventually what we're going to see, and I don't know how long it's going to take, but I would say relatively sooner rather than later, is some sort of a consolidation with regular bullish divergence starting to populate on the other side. I'm curious, where is the bearish control zone here? Bearish control zone is 97,550. 97,550 is, going to put it below the lower first, testing into this higher low structure over here. So, fair game at 95 to that 98.5 right here between the bands and this support resistance area of interest. So, let's go just take a look at the 4-hour. 4 is probably pretty low on momentum. 102, 177 to turn that back up on the 4-hour, but that's going to keep updating. We need to see some regular bullish divergence populating off this. This could still throw some hidden bullish divergence from this structure over here if it does put in a low here. I will note that this is expansion to the downside. One of the things that you can start to look at as, potential is it closing and regaining the lower second, not going sideways and having the lower second pass it, but it closing back above the lower second here at 101,100 or so, and then starting to paint some sort of a low side structure on that hidden bullish divergence. Then we can look at, the next low it needs to regain and where that's confluent with kind of the highs as a zone, between 102 and this low side structure at 103, 125 basically. And then we can look for potential trend breaks just above $105,000 at 105,331. Otherwise, it's expansion down. It has not lost this low side structure just yet. And if it does, then, there's a little bit it can hang on to over here in the just below 99, but realistically, it's this entire structure here that we've been talking about around the 94 to $95,000, even down to 93.5. Anywhere below there, we're looking at this guy back here, $92,000. So there is a lot to track, but it's pretty logical. I'm going to keep an eye on the 4-hour, 12-hour to give me early indications on continuation to the downside for the daily, and or the potential signs that things might change in these lower term timeframes and blunt some of the bearish look on the daily from all of that bearish divergence. But in reality, I mean, Bitcoin's kind of been shaking this off for a while. It's not really mattering too much in terms of, macro structure. It's just, corrective on the daily so far. And you could even go down to the hourly, and you can see the hourly is pretty much, still downside pressure. Had a little bit of a compression, a re-expansion to the downside after its initial compression to expansion, living below the basis, and trending. If it is going to reverse, it's right now it's got a lot of work to do. Again, it's almost $105,000 even for the hourly. So I suspect that we might even see some chopping around, maybe look for a swing lower high relative to the 105. And then if it breaks it back to the upside, look for possible higher low equal low structure. Otherwise, it's just a deviation and continuation down. Needs to regain the basis, but this has been re-expansion on the hourly for the moment, even down on the 15-minute. It's re-expansion to a compression. So if it's going to go sideways at this point, it can try for this last little high at 101 and then try to take out the structures at 101,666. Devil's number. But if it did that in the context of compression, we could potentially look for the 15-minute to re-expand back up to some of this prior support that is now likely going to act as resistance. And there's some even further left here to pay attention to as well. That's where you should take a look at some of the more macro time frames relative to something like a lower term time frame like the 15-minute. But that's going to be all I got for you today. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out.